I'd like to begin with you on interest rates. How much of a risk do rising interest rates pose to commercial real estate, to REITs, and to your business? Let's take those in reverse order, starting with Alexandria.
So we're pretty protected at Alexandria. We've got very little variable rate debt. Most of our debt is investment grade long-term debt that's fixed, so we don't have direct exposure. And as you know, real estate is generally a hedge against inflation. So in virtually all our leases, we have 3% or plus annual steps. So we're well protected. But I do think that if the Fed does push rates, imagine going back to '08 with TARP and quantitative easing, it's been about a decade. So to unwind that for quantitative tightening in a very short period of time, I think doesn't make a lot of sense.
Does it worry you? Does the potential fallout concern you, even if, for the near term, your leases protect you?
Well, I think we're protected for the long term. I'm more worried about the short term, the program trading and ETFs when rates rise.
You mean the impact on your stock?
Well, on I think all real estate stocks. Immediately when the 10-year bumps up, the stocks sell off. When the 10-year moves down, the stocks come back. So they trade in kind of lockstep, which makes actually no sense.
Should it all work out, wash out, if you will?
Well, I think
over the longer term?
Yeah, studies have shown that in rising interest rate environments for the first 3, 6, 9 months, real estate stocks have gotten hit, but over the longer term, as rates kind of maintain themselves, they come back because of the inherent hedge against inflation that real estate really is. It's one of the best.
Alexandria is the biggest landlord in biotech. And It's partly for that reason, I'm certain, that you are the rare real estate investor who really focuses on the underlying economics and trends in the industries you serve.
We do.
How do you anticipate that the Trump administration's plan for drug pricing will affect your clients?
Yeah, it's a good question, but let me just say there are really 5 factors that drive demand in our sector. One is funding for the National Institutes of Health, basic biomedical research, all-time high approaching $40 billion. Favorable FDA. Scott Gottlieb is probably the hero to everybody today. He's taken on and really exemplified great leadership, and I think he's got pricing in the sights to do smart things, not dumb things. Also, the amount of venture capital flowing into the industry, we're probably the second highest year. Fourthly, which most people don't think about, there's an all-time high approaching about 35, even 40 billion, same as the NIH, funding from biomedical charitable contributions. And then finally, pharma R&D and biotech R&D, again, very strong. Those are the things that drive this industry in a fairly fundamental way and that make our tenants have demand for our technical space.
It sounds to me then like you don't anticipate that the action the federal government is taking on drug pricing, and it's just starting, independent of what Scott Gottlieb is doing at the FDA, is going to have much of an impact on you.
Yeah, the weird thing about, I think, the discourse today is people are wanting lower priced drugs to be purchased by Medicare.
Right.
But if you look at cancer, many people are impacted by cancer, and they're all types, solid tumors, liquid tumors, blood cancers. You can get, for radiation and chemotherapy, which I consider to be caveman therapy someday, you can get reimbursement at the
cutting edge, which is.
But it's harder to get reimbursement for targeted therapies, which actually can retard or cure the cancer. So we're giving reimbursement for kind of caveman techniques, but we're not really figuring out how to pay for the most efficient, effective targeted therapies. In fact, Scott Gottlieb just made a presentation last week and highlighted that very thing.
I can't tell. Are these efforts to control pricing? Again, the effect on your industry is second order or possibly even third order, or is there an effect at all?
Well, I think pricing has to be based on value delivered. And so if the value delivered isn't high, the pricing should be low. And in fact, the Japanese system
many people want it to be.
Yeah. The Japanese system is one that we might want to look at, where you give a premium price to a really novel therapeutic that really can impact patients, and then you bring the price down over time. Our system has been the opposite. You start at a level, and then the companies increase prices.
You mentioned the importance of venture capital funding.
Yes.
About 40% of the funding into biotech in the first quarter of this year, which is where I have the most recent data, 40% of that was from Chinese funds. Do you track that? Do you think it's important to track that? And do you think that's sustainable given the tensions between the United States and China right now?
Well, I think we have to pay very close attention to that issue. China represents a strategic competitor in the trade world, certainly in the IP world they do, and the tentacles of investment are ones that we need to pay a lot more attention to. I would be very careful about taking too much Chinese investment.
Now, if you were a VC fund, how about somebody who is leasing space to companies that are funded by those VCs?
Well, again, it depends on the nature of funding. Is the Chinese investor controlling the company, or are they one of many?
So you're looking at that.
Oh, we definitely are. It's something that the federal government actually is looking at very closely as well.
Joel, one last question for you before we go. Your focus is on biotech. Increasingly, though, you're looking at ag tech, agricultural technology. Why?
Yes. Well, human health, as you know, is about, on the one hand, fighting disease and having a healthy body, and on the other hand, it's good nutrition, which comes from the whole agricultural sector. And it's interesting, the ag sector has been really on fire over the last 2 years. More venture capital has gone into the ag tech sector than in any time in recent history. And what's also interesting is the government funds the NIH to the tune of about $40 billion. Less than $1 billion goes into basic agricultural technology research by the government. An amazing factor. You ask, why shouldn't we be doing that? And that's another way to come back again toward the Chinese threat. If we did a better job of funding our agricultural technologies, we might not have that dependence on Chinese capital.